Hello, I'm Kevin Flynn, and welcome to another edition of Avalon's Market Minute for July 28th, 2013. Markets were flat last week, with the Nasdaq rising thanks to Apple and Amazon as both companies reported declines in earnings. The S&P 500 and the Dow Jones were about unchanged. Traders tried to drag the S&P over the 1700 level on Monday and Tuesday. The attempts came up short, so we'll have to wait to see what this week brings when a big helping of market-critical events gets served up in the final week before the financial sector and Europe start their summer vacation period. To begin with, the Federal Reserve meets this week, and they released their latest statement on Wednesday afternoon. The market absolutely hangs on Fed policy these days. Earnings growth is practically non-existent, and the big question for this week's meeting is whether or not the Monetary Policy Committee decides to keep quiet or stir the pot again. Last week, I thought the committee would opt for discretion and wait to say anything big until the September meeting. Why leave the markets in turmoil going into the vacation period? And the September meeting comes with a press conference attached, as well as new data. But now I'm not so sure, because the first estimate of gross domestic product, or GDP, for the second quarter will be released Wednesday morning before the open and before the committee's statement. They should have already seen the number when they start their work on Tuesday. The result could be a big surprise, and the members may feel compelled to at least partly address the situation. The measurement of GDP and its historical data are being completely revised all the way back to 1929, and there have been hints that the new process will result in significantly higher numbers, both past and present. Now, whether that makes anyone on Main Street feel better as opposed to Wall Street is another issue, but it could cause quite a stir and get the Fed to talk the Taper Act again. We could see an outcome of much better numbers, followed soon by the market tanking, because the Fed will have cover for slowing down. The European Central Bank makes its announcement on Thursday morning, and they could be influenced by the GDP number as well as what the Fed says and does. Then on Friday, there's the jobs report. And the Fed should also have an idea of that number at their Wednesday meeting. If you're wondering how the Labor Department could know the July number when Wednesday is the last day of the month, it's because the initial monthly estimates are based on data collected in the first half of the month. They do get revised later on, many times in fact, but the market's obsessed the most over that first release. Now, I wish I could tell you which way all of these numbers will go, but I can't. I could talk about what the other data is saying, and the surveys and the weekly claims results, but the truth is that with adjustment factors and sampling issues, the first estimates are often a big surprise and don't hold up very well. The revision in GDP measurement is another big wild card. What I can tell you is that a lot of the selling last week was traders squaring up positions and taking profits ahead of this week's very busy calendar. The market had a pretty good run the first half of the month, so unless the Fed is unmistakably dovish on Wednesday, you could see more profit taking ahead of the vacation season. This Thursday is the first day of August. The usual patterns for the month is weakness in the first half, followed by a rebound in the second. Technically, we're set up for a nice decline. But what happens on Wednesday and Friday could easily decide how the market is going to behave this month and the next. There could be fireworks, so pay attention. I'm Kevin Flynn, and thanks for listening to another edition of Avalon's Market Minute.